Hello and welcome to today's Virtual Arena, and joining me today is Daniel Eidan from R3. So Daniel, thank you very much for joining us here today in the Virtual Arena. How are you doing?
Good. Thank you. How are you doing?
Yeah, very, very good. And I'm really excited actually today because we're actually going to be discussing CBDCs, or central bank digital currencies, which I think is pretty damn topical. So without further ado, I think it's always better to get yourself to intro yourself, Dan, rather than me give a kind of roll of applause kind of spiel. So Daniel, can you give me a bit of background to yourself, your role at R3, and R3 yourselves?
Yeah, absolutely. So my name is Daniel Eidan. I'm a solution architect with R3. I'm actually based out of Toronto, Canada. One of the rare Canadian employees of the company. I've been with R3 for just over 3 years now, and my role, I guess, as a solution architect is roughly I'm kind of like one of the first technical people that interfaces with the client. So broadly speaking, I kind of have one hand within kind of the business client relationship, business development side, and I have the other hand within kind of the engineering team and the technical side of the business. So my background more generally is purely technical. My background is computer science and math. I've worked as an engineer for quite some time. And then I did a short stint kind of within the technical education world. So I spent some time kind of building out curriculum and kind of teaching within the private education world. I got interested in blockchain kind of organically as it started kind of bubbling up within the industry. And Fintech was always kind of on the sidelines. And then once I got introduced to R3, the rest was history.
You saw the intersectionality.
Yeah, it's been an incredible couple of years, and all signs show that it's going to be an incredible couple of years to come as well. So
it really does. And I before we jump into the really kind of juicy aspects of it, for our viewers that might not be so clued up, what is CBDC?
That's a great place to start, isn't it? So CBDC stands, it's a long acronym that stands for Central Bank Digital Currency. As you can assume, it has to do with central bank issuing currency. And if you think about kind of the fiat money that we all use today, so, the cash and the coins and the bills, so that would be kind of the analog version of CBDC. So if I had to describe kind of what that would look like if you took this kind of analog version and digitized it, it actually kind of depends a little bit on the context because it can be used differently within different use cases. And I'm sure we'll get to those use cases as we progress. But the idea at large is the notion of a central bank issuing available digital currency, either for commercial banks or for retail users.
Incredible. I mean, it's almost unbelievable to think that it's taken this long for it to really kind of hit the horizon, hit the headlines. But with that in mind, why is there now this sense of urgency for central banks to actually have to grapple with this technology?
Well, there's actually a lot of reasons. A lot of things are kind of coming. A lot of the stars are kind of aligning that are giving this kind of the sense of urgency that it has. I would also, maybe before we talk about the sense of urgency, I would also emphasize the fact that kind of innovation within this space has been going on for a long time. So it's not that this is coming out of nowhere. This has been going on for quite a while. But you're absolutely right that there's a sense of urgency today that didn't exist, maybe 6 months or a year ago. I've been probably working in CBDC for the larger part of the last 3 years. And 3 years ago, it seemed to be something that was a little bit more on the sidelines. And, today when you talk about CBDC, it's almost on the front page of the news. And so are central banks to a large degree. So I guess some of the kind of contributing factors to this would be, the cryptocurrencies at large have become more and more prominent and more relevant. I think the introduction of Libra and stable coins have kind of brought it in from the fringes into something that looks a little bit more kind of institutional and enterprise oriented. Libra in particular has kind of awoken the central banks to the fact that there are technology providers out there that actually have the network and the technical capacity to potentially challenge some of our assumptions around how we use money and what it's good for. Another couple of things that are contributing to it are the things that are going on in China, for example. The Central Bank of China is issuing a central bank digital currency as well. And some of the attributes of this type of technologies, it's a little bit different than printing paper bills. And specifically, it's different in the sense that if the Central Bank of China is issuing digital currency, or if the Central Bank of Canada is issuing digital currency, that currency does not necessarily need to stay within the geographical boundaries of the country. And it's actually a lot easier to export it to other jurisdictions. So you get this kind of competitive nature to the instrument itself that maybe doesn't exist as much in cash, almost for logistical reasons. It's heavy, it's cumbersome, it's hard to move around, that kind of stuff. Then I think the last thing that kind of brought this sense of urgency, or one of the more important things that kind of brought this sense of urgency, is actually the unfortunate circumstances around COVID-19. And there's actually a lot of different factors that I can kind of associate with COVID-19. I guess one of the first things is the decline in use of cash. So there whether correct or not, I walk around and I see more and more merchants and stores saying, we're not accepting cash at all, which is something that, actually I would question the legality of something like that, since cash is legal tender, and in fact they do have to accept it. But just that kind of adversary approach towards managing coins and bills and things like that all of a sudden became very, very prominent. Another thing is kind of the stimulus payments and the notion that the government may want to actually put cash that's coming from the government into the hands of its citizens, and to do that in a way that's kind of as quick as possible, but also as accurate as possible. There were all these headlines about the U.S. government paying these huge amounts of money to people that were actually dead. And if you think about the U.S. government, mailing checks to citizens that don't exist. I mean, that kind of, if nothing emphasizes the friction within the financial system, I think that would be something that would definitely emphasize it, and that's something that CBDC could potentially lend a helping hand to. The other couple of things around COVID-19 are supply chains are changing, trade finance is changing, capital markets are changing, and the common element to all these things are that they need a mechanism of settlement. You need to pay for goods and services. You need to pay for the purchase of securities and equities. So CBDC as an instrument to pay for those type of things is changing. So if you change your behavior around the things that you're purchasing, it's likely that you will also change how you're purchasing those things. And then the last thing I would say is kind of liquidity around kind of cross-border payments and the dollar and some of that stuff. And a lot of the spike in the dollar value came from kind of a lack of liquidity. And CBDC has this ability to actually kind of provide liquidity in whatever currency it's issued, again, in this kind of cross-border global environment. So those are kind of some, just a couple of the things that have, just a few things that.
I mean, that's incredible to hear that many use cases against using kind of that typical fiat physical cash. I mean, it's almost breathtaking. It almost, begs to believe why this hasn't been a conversation for far longer. Now, you've obviously given me actually quite a lot of ammunition as to why other forms of currency should be used less, hypothetically. But what are the actual kind of use cases of this digital fiat currency? What is the use case? What are the positives that this currency can do that others cannot?
So I guess kind of the first use case on the kind of institutional wholesale side is this idea that we can kind of take a lot of our financial infrastructure and implement it using CBDC. And it has certain attributes that are desirable. CBDC enables a distributed system, so it would enable kind of the counterparties to interact, to each run their own piece of software and to not have kind of a centralized point of failure, which would actually kind of lead to a more secure and resilient environment. It would also potentially allow for kind of 24/7 operating hours, and also reduce reconciliation amongst the counterparties. And the idea of reducing reconciliation is just that these payment flows are all happening kind of in sync with each other. And
with that in mind. Obviously recently in the news, Citigroup and Bank of America have been accidentally sending huge amounts of money to the wrong people, wrong companies, and even wrong retail clients as well. So I mean, would there be a use case for CBDC to stop these incredible transactions?
Absolutely. And I think another thing that's also very interesting about kind of wholesale central bank digital currency is if you zoom out a little bit from kind of the domestic environment. And what happens is a lot of these kind of national infrastructures for wholesale are kind of optimized at a domestic level, meaning that, if I'm in Canada versus if I'm in the US or if I'm in Switzerland, every country kind of optimizes their system in their own right. And what happens as a consequence of that is that everything that has to do with cross-border interactions becomes even more cumbersome and even more inefficient and even more kind of prone to reconciliation issues. So what are some of these things? I mean, cross-border payments are a huge thing. The FX market is the biggest market in the world. So there's large payments moving across border all the time. These payments are highly inefficient and also kind of opaque to the sender and receiver a lot of times. People don't even know how long it will take and how much it will cost often when they initiate those type of transactions. Another thing very similar is kind of offshore settlement for the purchase of securities or equities or bonds. So if I live in country A and I want to purchase things from country B, kind of at this kind of wholesale institutional level, then there's actually more risk for me as a purchaser if I'm from another country than if I am domestically. So these kind of cross-border transactions, whether it's just payments versus payments, so the movement of cash for cash, or whether it's cash for some type of security, are all kind of set to be optimized by CBDC, because CBDC kind of fundamentally would likely run on distributed systems. Now, the other side is, I guess, the retail side, and we didn't even get there yet. But when we look at some of the use cases for retail, and these are things that are becoming more and more popular today, a lot of it has to do with kind of like the decline in cash. So the ability today, so if you wanted to send me money digitally, what's interesting is you could say, well, I could do that to you today. I could give that to you today. And depending on where you live, you'd have different solutions available to you. But what you may not know as a retail user is that all those solutions are provided to you by private organizations, whether it's Visa or MasterCard or Venmo or any other of these kind of bank-to-bank retail applications. The majority of them are all privately run. You're not sending me quote unquote central bank money. What you're actually sending me is commercial bank money. Now, if you think about that as the citizen of a country, it actually it excludes people that don't have access to these type of tools, right? Because not everybody has a banking relationship, and not everybody has a Visa or a MasterCard, and so on and so forth. So central banks kind of coming in and saying, we want to provide central bank money to every citizen in the society. It would enable kind of inclusivity and would potentially give alternatives to cash payments that aren't run by the private sector, actually kind of facilitated by the public sector. So that's a huge focal point today.
Yeah, I was going to say, I mean, would that be the kind of key milestone, the key differentiator between the kind of digital currencies that we're all aware of now? Is this really the big milestone, the big differentiator for CBDCs?
I don't know if we can fully envision the key differentiator. I think, I heard an interesting kind of an analogy of CBDC as a baseline platform, really kind of being analogous to kind of like the smartphone. And when we developed the smartphone, it was, we could look at the smartphone and look at kind of the non-smartphone and say, yeah, this seems better than this, and we can browse the web and we can touch the screen and whatever it was 10, 15 years ago that seemed to be exciting. But we definitely couldn't imagine kind of the innovation layer that came on top of the smartphone, right? We couldn't imagine the Ubers and the Airbnbs and all the things that kind of really brought the smartphone into our everyday existence and social media and so on. So I think that CBDC, when you think about it kind of as like a baseline protocol level, that if is done properly would enable kind of innovation on top of it. I think we really only see, the real kind of beginnings of, we can touch the screen and we can send payments back and forth between each other kind of peer-to-peer and seamlessly, and it's this new version of digital cash. But the real innovation is going to happen, in the longer time horizon, and it's likely going to be things that we can't even think about today. One hint towards that is something that could be described as kind of payments as a service. And what's interesting about that is that, you don't necessarily want to deal with any financial instruments. You just want to deal with the thing you want to get, right? I don't want to pay at the store. I just want to get the thing that I want to buy. So more and more of these financial services are being integrated into their corresponding use cases in a way that is, completely frictionless from a user experience standpoint. So I think we'll see much, much more of that. And I think we'll net out in 10 years looking back and saying, how did we live without the smartphone, or how did we live without the digital camera? And there will likely be no one looking back and saying, oh, I'm going to pay with a regular $20 bill, other than quite kind of extreme use cases.
I mean, no one enjoys the paying aspect of shopping, do they? That's that's just the side game on. So yeah, I mean, with that
and I think when you think about Uber and Airbnb and things like that, I mean, I enjoy not having to pay when I enter and exit an Uber. I mean, it's been a while since I've entered and exited an Uber, but I used to do it all the time, and I used to not have to think about that payment side of things, right? So we'll likely see a lot more of that when companies like Uber can form their payment foundation on top of something that is much more sound than the existing payment stack of today.
Interesting. Now, I was going to ask you, really, is this still just in the kind of proof of concept stage? But for instance, we've seen in China, they started out in just Suzhou and Shanghai a couple of months ago. Within a couple of months, they're now extending it to Beijing, the Greater Bay Area with Hong Kong. I mean, this is beyond a proof of concept now. So, I mean, with that in mind, what's holding other countries back?
Yeah, you're absolutely right. The technology is almost all there. I mean, I think that it will continue to develop, but let's just say that the technology is not a blocker anymore. The technology is there. We've shown that we can do this. It's far, far beyond proof of concepts and proof of technology. I think some of the things that are left to be determined on the technology side are kind of, what does this look like at scale? And it's very hard to do something like that without actually kind of putting it into a production environment. But to answer your question more directly, I think that it really is an issue of governance and kind of political will. It's only a matter of time until the right kind of opportunity comes for a central bank to say, we are going to issue this digital currency on this ledger in order to promote this functionality, because it's not going to happen kind of in its own right. It's not going to happen because central banks are sitting around kind of twiddling their thumbs looking for something to do. So we're seeing some of these kind of popping up now. A lot of it looks like it's motivated from, like I said, either cross-border payments, offshore settlement kind of on the institutional side, or things like financial inclusion, in order to be better placed with our kind of financial infrastructure than we are today. So like I said, it's really governance and politics.
Yeah. Well, yeah, exactly. And for me, the kind of biggest outlier is the fact that China has taken this proof of concept and run with it, and then next door in India, it's the typical kind of digital currencies are still illegal almost.
Well, you highlight a really interesting aspect, and I think one thing that I enjoyed seeing, there's a project called the Digital Dollar Project, and what I like seeing with the way they kind of emphasize the notion of values within a currency, and I think that what's really interesting about that is, I mean, I didn't used to think about it as much in that sense, and I think that that's a very meaningful representation. And when you bring kind of China into the picture, if you just kind of contrast, for example, China with the U.S., it's interesting to kind of understand the values of each country and each economy, and how the corresponding currency embodies those values. And when you see a country like China kind of driving this agenda and going ahead, you have to kind of consider the values and the circumstances that China has versus the values and circumstances that exist in the U.S. And one thing that would kind of float to the top right away is privacy and identity. So China is kind of advantaged in some sense because their notion of privacy and identity, or citizens in China are more willingly able to share their identity, and that actually lends itself a little bit better to these type of systems, because if you can control the identity of every citizen and you have access to that, it becomes a lot easier to kind of issue these digital currencies, at least at a retail level. Whereas in the United States, where privacy is valued kind of more highly, it actually becomes a little bit more challenging to do these type of things. So it's a matter of kind of threading the needle in every economy on what the values are for that economy and rolling out a central bank digital currency that corresponds to those values. And I would also flip that around and say, as a consumer, I no longer need to use, Canadian dollars or US dollars or Swiss francs just because of my physical proximity to the issuer. I may be able to use whatever currency aligns with my values, which creates a really interesting kind of competitive space in the currency world, where now, I can open up my wallet and maybe hold 10, 20, 30 different currencies and pay and use each currency depending on who I'm paying, but also maybe depending on which currency aligns with my values the most.
Would that halt some of the interoperability between these currencies?
I don't think so. I think actually it would promote interoperability within the currencies. I mean, no one really wants to use a currency that isn't widely accepted, right? So at a domestic level, these things are mandated, right? You can't you can't not accept a fiat currency. That's kind of by definition. It needs to be universally accessible. So the question then becomes, if I would issue a central bank digital currency that only works within my economy, what would be the usability of that? It would hinder the usability of that if I kind of put it behind a walled garden. And broadly speaking, I would say that's not the case. I think that in spite of there being kind of competition potentially between the currencies, it's widely accepted that currencies need to be able to, be exchanged for each other. So when you think about interoperability, I guess I would split it up into two different kind of components. I think that one component is interoperability between issuers. Can I replace, a Swiss franc for a US dollar? Can I do that kind of transaction where with one hand I'm giving a US dollar and with the other hand I'm accepting a Swiss franc? And can I do those in a way that kind of minimizes reconciliation and has kind of one operational structure around it? The other side of things is can different technologies interact with each other? So an example, if the U.S. Federal Reserve would issue a central bank digital currency on technology A and technology B, will these two technologies kind of play together nicely in the sandbox? And I think that interoperability is actually being driven forward by specifically these use cases, and in particular, central bank digital currency. I mean, CBDC, no central bank is going to sit there and say, no matter how big, is going to sit there and say, we're going to issue a central bank digital currency that doesn't interact with other currencies. That's simply that will be to its own disadvantage. So interoperability is getting pushed. I think interoperability though had a lot more hype earlier on than necessary. So while we were still building out kind of core infrastructure, a lot of people were focused on, yeah, but can I talk to this, and can I talk to this, and can I talk to this, and can I talk to this? And I would constantly remind people that when Macs and PCs first came out, you couldn't take a file from one computer and put it into the next, let alone, have a conference like this where you could be on any computer that you want, running any software that you want, that kind of thing. So it will get there. It's just a matter of the use cases kind of driving that agenda.
Interesting. Now, we've obviously talked about the topic of CBDCs and the use cases, but I kind of want to know what you've been working on in this sector. Can you tell me a bit more about Corda?
Yeah, absolutely. So Corda is an enterprise distributed ledger platform. And when I describe it like that, sometimes it sounds a little bit kind of vague and strange. And I think that the kind of the simplest way to think about it is Corda is an operating system that you can write applications on top of. So the difference between Corda and kind of traditional operating systems is that Corda runs on many, many computers at the same time versus only running on one computer. So imagine an operating system that is able to run applications, but what's unique about this operating system is that it's able to run applications and synchronize between these applications on many, many different systems. And if you think back to what I mentioned about, for example, optimizing domestic economies versus optimizing, cross-border transactions, that's why Corda lends itself well to these type of use cases, because instead of now just optimizing, my own firm, I can optimize entire industries. Instead of optimizing, one country, I can optimize multiple countries all at the same time. Now, the interesting thing about kind of comparing it to an operating system is if you ask me what Windows does, I could give you kind of the technical definition that it allocates resources between the CPU and programs that run it, but that doesn't really say very much, right? It actually depends what you want to do and whether or not you want to, use a Zoom meeting to chat with your friends, or you want to use a word processor, or you want to play a flight simulator. Those three things have actually almost nothing in common, except for the fact that they need to communicate with the computer underneath it and consume resources in order for the user to do what they're ultimately there to do. So, very much analogous to that, Corda underpins many, many different types of applications. We started out primarily in the finance space, doing projects around kind of financial infrastructure and things like that. Within kind of the banking world, there's a lot of kind of applications within capital markets, within trade finance. We're increasingly moving into other sectors like insurance and healthcare and supply chain and trade finance. So it really kind of depends on who the users are, but it has a lot of applications. I would say that we've kind of started from the top and focused on applications that are kind of institutional and enterprise in nature. That's what Corda was originally built for, was this kind of distributed ledger or blockchain platform for enterprise and for institutional regulated clients. On the other side of the spectrum, you have kind of blockchain platforms that are completely permissionless and completely public and completely anonymous. So that would kind of sit at the farther end of the spectrum. But back to Corda is slowly kind of marching towards, I would almost say kind of marching a little bit more towards the middle, meaning that, a day may not be so far away where you and I could be interacting with Corda on a regular basis without even necessarily really knowing about it. The same way that we interact with our core banking system when we manage our deposits, or, if we make a claim on our life insurance, that kind of thing. So at the end of the day, it's just going to be like a database that underpins a function that you use as a user, as opposed to you kind of interacting with it directly.
And really, it kind of actually leads perfectly onto my next question, in the fact that, because of that kind of invisibility that it has, just how seamless it is, it's not actually just a proof of concept, is it? It's actually currently being utilized in a way by, or even some of the kind of traditional banks. Is that correct?
Yeah, absolutely. So Corda is in production and is supporting live applications today. Whether or not the end users of those applications know it or not, to be perfectly honest. So Corda is very much not a trial type piece of software. It's a hardened piece of enterprise technology that's being run in some of the most rigorous and regulated institutions in the world. So it is a very real thing.
Excellent. And with that in mind, what are the? We've talked about the potential use cases for CBDCs, and you've kind of given me that outline of what Corda is, and how it can be used. But what could it be used for going into the future alongside CBDCs?
Oh, that's a good question. So kind of like in big picture, where do I see this going? Mm-hmm. I would say that what's likely going to happen is all of these different systems that we're so used to being decoupled from each other are likely going to be able to interact with each other, and they're going to be able to interact with each other because platforms like Corda and DLT will become ubiquitous within the industry. So there's a great kind of story where you go to your dentist and then you leave your dental office, and the fact that you leave your dental office triggers your payment, but your payment comes from your insurer, and your insurer later reclaims it from your bank, and your bank, and if you think about all these different components, right? Like, I don't live in a world today where I would assume that my healthcare provider speaks to my dental office, who speaks to my insurance provider, who speaks with my bank. That's just not real. I'm in the middle there connecting the dots, right? I have to book my next appointment. I have to talk to my insurer. I have to make sure that the money goes through. I have to make sure that my insurer can put a claim on the bank, that the bank transfers the money. I'm in the middle connecting all those things. And the reason I'm doing that is because every one of those systems, regardless of who the healthcare provider is and who the insurer is and who my bank is, I don't expect them to connect and talk to each other, right? So I think that from a retail retail standpoint, what we're likely to see is kind of the interconnectivity of all those systems. And we'll likely take it for granted very, very quickly. We'll just assume that all these systems can speak to each other because they're kind of running the same operating system, so to speak. So I think from a retail side, that's what the future is going to look like more and more. And then on the institutional side, I mean, these small transactions like, paying for, my appointment at the dentist or whatever it is become, magnified, orders of multitude more. So you can imagine what it would be like, moving money from one side of the world to the other side of the world to buy a government issued bond that's later traded on a secondary market, that, things of that nature will all of a sudden become much more efficient, much less prone to error. And then I can only imagine what the use cases will come out from that would be.
I mean, just from those 2 points alone, it's so exciting and it goes back to what you were saying earlier in the chat, is this whole kind of, will we look back in 10 years and be like, God, what was it like without our mobile phones? I mean, the anecdote that I was always told in maths, you won't have a calculator with you when you're on the street. And now, lo and behold, I have one with me.
Yes, you do.
And we'll probably think of just having this digital currency that's connected to everything, and looking at, it goes into a whole bigger topic of which I don't think we have time for in terms of banking as a service, and rather than paying for financial services and then going to your bank to get the money to pay for that service, it's just all one seamless
right. And that's a very good point, right? Because you asked me about these particular use cases, and I can talk about the dentist and the insurance and the bank and the whatever, but what cuts across all those things is the notion of money. Right. I would say that there's 2 things, actually. There's money and there's identity. And those 2 kind of fundamental use cases, if you could put them and optimize who I am and how I pay for goods and services across multiple industries, I mean, that would be an absolute game changer. So maybe my insurance provider doesn't necessarily need to talk to my bank, but if I can use both financial instruments, if I can use one financial instrument across both those use cases and many, many, many more, I mean, that would give me an environment to operate in that would be, would have much less friction than the world today.
Brilliant. And you know what, going on to then the institutional side, the cost savings alone of those huge transactions, or those millions of transactions at low volume, which must cost, the bank is suddenly losing a huge amount of revenue. That's going to change the banking industry forever.
Absolutely. Well, the banks are losing revenue, and it's also passed on to the customer. So I was recently, true story, I was recently at a coffee shop down the street, and they have a big sign up that said, due to COVID and increase in digital payments, we're charging more money for the credit card transactions in order to recoup some of our losses.
No.
And that's reality on the street. And when you think about kind of merchant fees that are invisible to you and I, but merchants pay a heavy toll for, a lot of this stuff is actually passed on to the consumers. So banks pay a heavy toll for these inefficiencies, and often they're passed on to the actual consumers themselves. So that it's going to be a win-win for everybody.
Wow. I mean, we've kind of focused on some of those, but those were obviously with the interoperability of how Corda kind of allows that kind of connection, that kind of talking together. To end things, I want the kind of crystal ball. And you can go as far-reaching as you want, because I'm sure no one's going to get angry on the internet with you over it. But crystal ball time. Where do you see CBDCs in the next 5 years? How will people interact with them?
That's a great way to end it off. I think that within the next 5 years, I think 5 years is a realistic timeline. If you would have asked me, 2 to 3 years, I think I would have had to kind of hum and haw a little bit more. I wouldn't be sure, whether it would be kind of ubiquitous or not. I think that within a 5 year kind of time horizon, I think that CBDCs will just be something that is almost completely trivial. I do think, though, that CBDCs will change drastically depending on the country of the issuer. I think the CBDC in China will look very different than the CBDC in the US, and will look very different than CBDCs in some emerging economies. And I think within 5 years, I think we'll have a good kind of set of examples of CBDCs from different locations in the world that support, fundamentally different use cases. I mean, the dollar CBDC and the yen CBDC are going to look very, very different than CBDCs that were issued specifically for, financial inclusion and small peer-to-peer retail payments, or maybe some of the work that's going on in Europe with the reduction of cash and things like that. So I think we'll have a good kind of array of different CBDC offerings in the market, and that's likely when things will start kind of converging. And if I fast forward maybe another 5 years to a 10-year time horizon, I can see a reality where almost everything is done with central bank digital currency of some form, whether it's issued by the central banks or and distributed by the commercial banks or otherwise. And I can see a reality as a retail user that I could potentially carry as many currencies as I want with me and pay automatically based on how I live my life and what types of goods and services I consume. And with that, I think I would also say, the advantage of kind of big data getting coupled onto that is going to be, it's going to absolutely change our behavior as consumers and on the flip side, change kind of merchant behavior as well.
Blimey. Really sounds like...
I don't know if that sounds exciting. I feel like that's kind of nerdy and geeky, but
it sounds like the genie out of the bottle moment for payments. I've certainly noticed that payments has been the strongest financial vertical to uptake within fintech, and this seems just like the next milestone in actually kind of creating open banking, becoming open finance, and actually bringing in those real use cases that means that people on the street who currently don't know what the word fintech even means or open banking even means, suddenly they're aware of it because they realize that suddenly almost the rug has been pulled out from underneath their feet and cash is no longer even needed. But that is probably a conversation for another time.
Another way to frame it is, and I'll wrap up with this. When you think about all the innovation that's happened with payments, it's all happened on top of something that hasn't moved. So fiat currency has had two forms. It's either reserves in the central bank or it's, bills and coins. And on top of that, we've built all this huge payment stack with all these services and all these products. And what's fundamentally different about CBDC is that we're not talking about adding another layer of innovation. We're not talking about another, credit card or another type of PayPal or anything like that. What we're actually talking about is changing the base. Actually, I wouldn't say changing, but we're talking about adding another thing to the base that will substantially change what this kind of payment stack looks like. So it really is thoroughly exciting. It's rippling through the entire system. So.
Good choice of words there.
Busy days.
Excellent. Well, Daniel, thank you so much for joining us here today on the Virtual Arena. It's been an absolute pleasure. I hope you've had a good time yourself.
Absolutely. Thanks for having me.
Brilliant. And to all our viewers, thank you also for watching. You can catch the rest of the series and much more over at www.fintechf.com and of course LinkedIn and YouTube. And I hope to see you next time. See ya. Goodbye.